The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The Monetary Authority of Singapore just unveiled Bloom, short for Borderless Liquid Open Online Multi-Currency. It's a new initiative that could redefine how money moves across borders. By enabling settlement using tokenized bank liabilities and regulated stablecoins, Bloom aims to make financial transactions faster, more efficient, and more transparent, while cementing Singapore's role as a global hub for digital asset innovation. But beyond the tech buzz, this shift has deep implications for markets and investors. As assets and settlements become digitalized, who stands to gain? Where do new risks emerge? And how should investors position themselves as blockchain-based finance becomes part of the mainstream? Well, to find out more, joining me now is Yee Shen Hao, who is the Financial Services Manager at Phillip Capital. Hi, Shen Hao. Welcome to the show.
Hi, Hongbin. Thanks for having me.
Thank you so much for joining us. Well, Shen Hao, Singapore is taking a bold step with Bloom, bringing tokenized money into mainstream settlement. What is this initiative exactly about, and why is it such a significant development for Singapore's financial system?
So Bloom is Singapore's newest initiative to bring tokenized money into everyday finance, allowing transfers for multiple currencies from the G10 and Asian currencies. And before Bloom, there has been many pilot or test environments where tokenization was being tested. But with Bloom, bank liabilities and well-regulated stablecoins can now settle real-world payments on digital ledgers. So for business owners and investors, think of it as your money moving securely as digital tokens on a shared system, but with the trust and safeguards that you expect from traditional banks that use fiat currency. This modernizes how money moves behind the scenes between banks, brokers, and market infrastructures. And this helps to cut down friction and costs and also risk associated with settlement. And importantly for Bloom, it will now exist alongside earlier projects by MAS, such as Digital Payment Token Regime, which lays the groundwork for cryptocurrencies and stablecoins, Project Ubin, Project Orchid, and also Project Guardian. So Bloom isn't a standalone effort. It complements and operationalizes the foundational projects, which signals Singapore's active involvement in shaping the future of finance. And for financial institutions like Phillip Capital, it provides regulated and efficient digital settlement layer that can boost market confidence and Singapore's global competitiveness. Yes.
Okay, so what are the biggest changes Bloom introduces for the way financial transactions or settlements are carried out today?
So the first big change I can see is the speed of the transfer. So as you know, currently, the international standard wire transfers using systems such as SWIFT can generally take up to 2 to 5 business days. So Bloom can potentially replace today's slow multi-step process with something that is nearer to an instant transfer for cross-border flows. This is great if, say, you are a business owner who trades across borders. You will benefit from faster access to funds. Then also the second big change is the automation of back-end tasks. Many tasks such as confirming trades, matching records, chasing payments can now be automated using AI agents on the chain, and this reduces operational costs. And thirdly, with faster and more predictable settlement, companies and financial institutions do not have to park so much excess cash or collateral just in case. So this will improve liquidity management across different markets.
Okay, so then how different is this from current payment or clearing systems we've already been using in banking or investing?
So today, for every bank they record their cash on its own ledger. And between banks, when they make big transfers, transactions have to be reconciled with their own ledger. So with tokenized money, cash isn't just balanced on each institution's ledgers anymore. It is of a single digital token which everyone shares on the same ledger. So this cuts down on the reconciliation efforts and hassle. And also for compliance checks and forex conversions and also settlement instructions, they currently run on separate systems using a tokenized model such as Bloom. These functions can be embedded directly into the token or smart contracts, and this enables automated triggers and purpose-bound payments for tighter integration for the transactions. And also thirdly, with Bloom, you can now have payments that are running 24/7 instead of being cut off by office hours and cut-off times. So tokenized settlements is always on, allowing for transactions to clear across time zones without delays. So this closely resembles to digital markets and also the crypto ledgers that we currently already trade.
Okay. Well, I mean, with faster and more transparent settlements, certain sectors could stand to benefit from capital markets to fintech. So which parts of the market or which types of assets do you think stand to benefit most from tokenized settlement or cross-border interoperability?
I think the most obvious use case is forex trading, where tokenized settlement can help to reduce the forex settlement risk and speed up the cross-border transfers, and also give the treasurers a clearer picture of where their cash is at any point in time. The second type of asset I think can benefit the most is real estate, commodities, and also alternative assets, because tokenization makes it possible to buy fractional slices of physical assets instead of committing to large sums for property or commodities. So for Bloom, you have faster settlements that can make it easier and quicker for these fractional units to be traded, instead of previously you have a high barrier to entry for these asset classes. Yeah, and also thirdly, I think capital markets can also be tokenized with bonds and funds and money market instruments that can create a more seamless ecosystem. Yeah.
Okay. Could this open new opportunities for investors to access global assets more easily as well?
Yes, definitely. It can help to create more bite-sized, globally diversified investment products that are easier to buy and trade. I can think of possibly tokenized basket of bonds and global income strategies. Yeah, and with faster multi-currency settlements, it also means that investors can manage international cross-border trades more efficiently without their funds getting stuck in between, while waiting for the settlement. Yeah.
Okay. Well, as with new infrastructure, tokenization and stablecoin-based settlement also bring, new forms of risk. So what are some of the main risks or challenges investors should be aware of as tokenized assets, become more common?
So I think for now, because we are still in the early stages, tokenized markets are still developing, and some instruments may have limited secondary market liquidity. So investors should be prepared for wider spreads or slower exit times, especially for newer and more specialized tokenized assets. And secondly, the risk of the technology behind, right? Behind every tokenized product is a stack of smart contracts, platform providers, and custodians. But if any part of the technology fails due to errors, coding errors, or cybersecurity incidences, it can disrupt access or make the settlement, cause some problems with the settlement, even if the underlying assets are safe. And also, where we store our assets matters, as we can remember the 2022 collapse of FTX, and also subsequently Singaporeans who invested through the regulated subsidiary called Liquid under FTX. It shows that even for licensed platforms, they can fail if the safeguards are weak. So investors need to assess the custody arrangements and also the controls and the transparency of any platform before you choose the platforms that are offering these products. And last but not least, I think market risk will always be there, and investors need to educate themselves to distinguish between actual genuine efforts to provide access and efficiency in these products. For those products that use the word tokenization, right? Some of them are actually doing it for marketing purposes, but may actually turn out to be Ponzi schemes or scams. Yeah, so we all need to educate ourselves on this. Yeah.
Then on that note, do you see potential regulatory hurdles or stability concerns around the use of stablecoins or tokenized bank liabilities?
I think regulators like MAS rightly focus on these three things: a strong reserve backing of the tokenized assets, and making sure that the redemption is at par, the par value, and also making sure that there's sound risk management and governance. So for well-regulated stablecoins and tokenized bank liabilities, they can coexist if they meet these standards. But I think there are some concerns about, cross-border consistencies, because Singapore is known to be efficient, but we know that different jurisdictions move at different speeds. So if the rules are not aligned across different borders, there is a risk of regulatory arbitrage or uncertainty about certain instruments that are being treated in different markets. And I think PM Wong recently spoke about this at the G20 summit, where we need to look at the need to reform the global rule-based system, right? Yeah, and also there will always be systemic risks if there is a concentration in in a small number of platforms. If a few platforms or issuers become too large, any disruption can have system-wide implications. So the positive thing in Singapore is that for initiatives like Bloom, we are building things within a regulated parameter that involves existing banks and reputable financial institutions. So for firms like ours, it gives us a clear framework to evaluate products and infrastructures which are suitable for us to bring to our clients.
Definitely. I mean, digital settlement may change how portfolios are built, traded, and diversified as well, especially for investors seeking global exposure. So how could these developments kind of influence the way investors construct portfolios or manage liquidity going forward? Do you expect more investors to seek global exposure?
I think most investors, for us, we already recommend them to have global exposure. But I think with Bloom and with faster settlement, tokenized cash-like instruments, investors can hold a greater proportion of their portfolio of liquid assets in yield-bearing assets that are still very liquid and convert them quickly for settlement when needed. Yeah. Then you can also have easier access to fractional, as I mentioned earlier, fractional products such as overseas real estate commodities and alternative strategies that can be previously very costly to access. So this helps to support broader diversification across markets and asset classes.
So from your team's perspective, how are you viewing these developments and what strategies are you currently advising clients to, consider as digital settlement infrastructure continues to take shape?
For now, my team, we are called the Wealth Stewards at Phillip Capital. We focus on regulated products. So I think one thing that we always tell clients is to get the fundamentals right, meaning we focus on assessing whether every product, what is the counterparty quality, and whether there is a clarity in terms of the regulation, and also what is the custody arrangement. If these are not robust, we would generally not recommend clients to put into these products, regardless of how innovative the product might look like. Yeah, and we also think that education is crucial, especially given past instances where certain platforms or products are not actually regulated, but Singaporeans put their money in it and they suffer losses. So due diligence on platform security and custody arrangement is essential. So if clients want to have small exposure to all these new types of assets, they can start off with very modest amounts. But we should always take note that it is not a shortcut to higher returns.
Right.
So, for example, we do partner with reputable fund houses. Our platform does offer, for example, ETFs that have exposure to cryptocurrency. But for now, it is strictly for accredited investors because of the higher risk profile. Then for retail investors, they are encouraged to approach tokenized and digital assets carefully. If you really want to start, you start with a small amount that you can afford to lose. Basically. So we are also watching to see how these infrastructures mature before we integrate them into our advisory practice.
Okay. Overall, though, are you seeing growing investor interest in tokenized or digital asset-linked products?
Yes. Definitely. Just today, actually, I was asked whether it's a good time to enter into Bitcoin now that you saw the price drop quite a lot. I think younger and digitally savvy investors, right, they are more comfortable with investing in these types of assets. But majority of young clients that I know, they still want to invest in mainly regulated and asset-backed exposure rather than pure crypto speculation. Then for the older, more affluent, high net worth clients, if they are exploring tokenized versions of assets, they usually choose those that they already understand, such as bonds, funds, or real estate linked strategies for better access and diversification.
Okay.
So that said, interest is quite selective and cautious. Most investors are not looking to change their entire portfolio overnight. So our role is to help them to navigate this space safely and make sure that whichever investments that they choose is aligned with their long-term investment objectives. Yeah.
All right. Well, looking ahead then, Shen Hao, how do you see Bloom and broader tokenization efforts shaping Singapore's position in global finance over the next 5 years?
So I think Singapore is in a quite unique position in Southeast Asia where we can combine innovation with strong regulation. Singapore can be a place where global issuers, infrastructure providers, and also investors can come together to launch and trade tokenized products with confidence. Yeah, and as cross-border tokenized settlement becomes more common, Singapore is also well placed to become the regional node that connects Asian investors to the rest of the world's assets and also global capital for outward investors into Asia. Yeah, for Bloom and also Project Guardian, the earlier Project Guardian, and also the related efforts, these can create a common platform for banks, brokers, fintech, and also asset managers to experiment and also develop new solutions. So I think this benefits firms like Phillip Capital also. And also, more importantly, this gives our clients access to richer and more efficient set of investment tools that are anchored in Singapore. Yeah, so I think overall this is an opportunity for us, for Singapore to deepen its role as a bridge to help clients, whether in Singapore or out of Singapore, to navigate today's familiar products with the next generation of digitally enabled, globally connected solutions without compromising on risk management and being prudent with choosing our investment solutions. Yeah.
Definitely. Some great insights from you there. Thank you so much, Shen Hao, for joining me today.
Thank you, Hongbin.
Thank you. That was Yee Shen Hao, Financial Services Manager at Phillip Capital. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at moneyfm893.sg